But let's shift focus and let's talk about Equitas SFB and let's talk about how their Q4 has panned out. PN Vasudevan, the MD and CEO at Equitas Small Finance Bank, joins in on the show right now. Mr. Vasudevan, great to have you today on ET Now. You know, rates have likely peaked, but the rise of rates has been quite dramatic. In this environment, you've grown at 35%. What's been the impact that these rate hikes have had for you on ground, and do you expect to continue to grow at this kind of a healthy pace?
Yeah, good morning. The rates have been going up, and our own cost of funds, if you have noticed, has gone to 6.6% for the March quarter ending. And the old deposits are still getting repriced. I mean, we still carry a large amount of old deposits at low rates, and they will get replaced with new deposits at higher rates. So we believe that the rate could go as much as maybe 7.2% over the next 2 quarters from the 6.6 that we saw in the month of March. But on the ground, in terms of demand, since we are largely focused on the informal economy borrowers, and the ticket sizes are very low. Our average ticket size, if I remove microfinance, the average ticket size of lending is just around 6 lakh rupees. So in that space, the unmet demand continues to be quite large in all the markets that we operate. So yes, last year we had a growth of 35%, but that was because it was a low base coming off the COVID period. This year we expect we should be able to grow at anywhere around 25% plus.
Right. Mr. Vasudevan, do you see these higher rates impacting credit costs in any which way? And I mean, could there be a downside risk to macros among other factors? And could that really create problems for your balance sheet?
Normally the fact is that when interest rates go up, it actually should impact the credit capability of a borrower because his EMI suddenly goes beyond what he can repay. But in our case, as I mentioned, our disbursement ticket sizes are really small, 6 lakh rupees, and the tenures are also reasonably short. Our average, tenure normally it goes around 5 to 7 years. So that way, a smaller ticket size and a shorter tenure means that the impact of increase in interest rate is not very high from an EMI perspective. So we don't expect that the increased rate should have an effect on the credit cost.
Vasudevan, morning now, an outlook on your deposit growth because that has managed to hold out despite a tough environment. What is it that Equitas is doing differently? Is it the rates that you offer, and do you think that these rates are sustainable?
Yeah, so we do offer a rate which is obviously higher than the large banks. We are a smaller bank, and we are of course a newer bank. So it takes time for the brand to get established amongst depositors. But if you look at the pre-May of 2022, the peak interest rate that we were offering and the peak interest rate that the large banks were offering, the difference was as much as around 2.5%. And today that difference is actually narrowed to about 1.7%. So we have effectively, what it means is that we have increased our deposit rates, but at rates lower than the larger banks, narrowing the gap that we have with them. So I think that kind of a rate is sustainable from a lending perspective. And in terms of deposit growth, last year we had a 34% growth in deposit. This year we expect anywhere around 25 to 30% growth in deposit to come in. And the retail term deposit is something that's really doing very well. CASA is under stress, and I believe that CASA is going to be under stress for some more time simply because the attractiveness of putting money into deposit is so high that people are likely to move whatever money they don't need in savings. They will want to move it to deposit to earn a better rate. So CASA could pressure, but retail deposit is doing well. So overall, we believe that deposit pace should keep up with the advances growth pace.
Okay, so that's the take coming in as far as the loan is concerned. But sir, I wanted to get a take with respect to the leadership as well, because that remains very important for the entire sector as well. So for your own company, I know you have given the indication earlier that you would like to continue as the MD and CEO, given the fact you're still eligible. But anything that you've heard from the RBI on it yet? Okay, we'll try and get more details as far as that is concerned. Maybe my audio is not clear. Guys, you want to get a sense?
Is frozen. We will get back to Mr. Vasudevan.
Let's continue a conversation with the management at Equitas Small Finance Bank. Mr. Vasudevan is still with us. Mr. Vasudevan, before we got into that technical glitch, I wanted to understand from you with respect to the succession plan. I know it comes for renewal in the month of July. What's the update with respect to that? Have you put in the application? Have you heard anything back from the RBI?
Yeah, so we have applied to RBI for a 3-year extension. The last extension is expiring in 3rd of July this year. We applied for a 3-year extension and we are awaiting the feedback from RBI on that.
Usually, how much time does it take? Have they come back with any questions, or what's the base case expectation that you have?
Oh, I think we have to just wait for the RBI feedback. Normally we can't really share any dialogues with anyone else. But it takes about it takes a few months for them to process and get back. So we generally end up applying fairly in advance also, and so we should just wait for the feedback to come from RBI.
Mr. Vasudevan, then you could tell us, what really is happening in, say, the next 3 years. And I don't want to talk quarter and quarter here, but the longer term, vision that you have. Where is it that you see Equitas SFB in terms of your book size, in terms of what the mix could be, whether the sustainability can be expected when it comes to your ROAs, your NIMs, your credit costs, etc. What are the assumptions that you've made at your end for, say, the next 2 to 3 years?
See, basically, we converted into a bank about 6 years back. And, the cost of funds, the landed cost of money that we calculate in Equitas, which is the cost of interest cost plus the cost of raising that money plus our SLR CRR cost. If you take all of that put together as a landed cost of money, that has been coming down. Obviously, it's been coming down over the last 6 years. It was as 13% just as soon as we became a bank, and now it's around just over 8%, 8.2, 8.25%. And that is expected to go further down as we keep mobilizing deposits at a rate higher than the increase in the cost of raising that money. And as our landed cost of money comes down, more and more avenues for lending also opens up. Equitas is very strong in the informal sector economy lending. So we have a range of products. We have the small business loans, which is about 37% of our book. We have the commercial vehicle and the used car financing, which is about 25%. We have the microfinance, which is about 18%. We have the affordable housing, which is about 10%. And then the MSCF, working capital financing, which is about 5%. So we have a broad range of lending products. It's a very broad-based platform that we are lending, building the infrastructure of the bank on. And each of the markets where we lend has a high level of unmet demand significantly because of the fact that they are from the informal and difficult to lend and difficult to collect. So that acts as a natural entry barrier, and there's a lot of unmet demand in that space. So we believe that given the fact that we have the ability, we have the capability built over the last 15 years to address that segment, and given the fact that our landed cost of money has been coming down consistently over the last 6 years, and expected to go further down the trajectory over the next 4 or 5 years, and no more areas of lending opportunity opening for the bank. I think on a combination basis, around 25% growth is something that we should be able to look at for the next 3-4 years.
Before we let you go, Mr. Vasudevan, what's the prospect with respect to the universal banking license? What's the strategy? Any timeline on that?
We had to complete the merger of the whole with the bank because that was one of our licensing conditions, and we have just completed that recently in the month of February. So we are in touch with the regulators, and as and when we get a permission to apply for the universal bank, then we will end up applying. So obviously there are no timelines, but as and when the window opens for us, we will definitely look to apply.
Mr. Vasudevan, great to have you today on ET Now. Thank you so much for taking the time out.
Thank you.
Okay, let's move on.